The Strait of Hormuz remains closed. Potential scenarios ahead, alternatives, and why nobody saw this coming are the hot topics of this week. Joining me to make sense of this, however, is one of the few people who actually looked into this years ago. Bozorgmeh Sharafeddin, head of digital at Iran International and former Reuters energy correspondent, explains.
And at that time, for me, the question was, what if the Islamic Republic finally implements the threat and closes the Strait of Hormuz? Because since my childhood, I remember the Islamic Republic was making the threat.
At the same time, US blockades Iranian ports and UAE departs from OPEC. Are the Iranian oil fields reaching the point of no return? Joining me from Dubai is Iman Nasiri, Managing Director for Middle East Research at the oil consultancy FG Nexen Group.
And our forecast in that scenario for May average price, we are 7th of May, another 3 weeks, is over $130 for Brent price currently, in the absence of a resolution from what is now going on in terms of another hope for a resolution.
Welcome to Eye for Iran. To borrow from last week's issue of The Economist, covering the events in the Persian Gulf induces a special kind of agony. Markets are up and down, prices are all over the place, gyrating, as they put it. But that volatility is exactly why we're here today. The Strait of Hormuz remains closed. The potential scenarios ahead, alternatives, and why nobody saw this coming, at least not to this degree, are hot topics these days. And joining me to make sense of all this is one of the few people who actually looked into this years ago. Bozorgmeh Sharafeddin, head of digital at Iran International and former Reuters energy correspondent. Welcome.
Thanks. I totally agree. It's a huge mess. No one expected that, and no one saw this coming. As you mentioned, I looked into this issue in 2018 when I was Reuters energy correspondent. And at that time, for me, the question was, what if the Islamic Republic finally implements the threat and closes the Strait of Hormuz? Because since my childhood, I remember the Islamic Republic was making the threat. And even under the Shah, this was a threat against regional and other nations. At that time, I talked to a lot of officials and analysts in the region. And my question was, what are the alternative routes to the Strait of Hormuz? But to my surprise, most of these projects, mostly pipelines, were underfunded. And the reason was that they were saying that they didn't make economic sense. They were not feasible. So they were saying that why should we spend millions of dollars on projects that might never be used? In a way, I can say that they underestimated the threat, and maybe they overestimated the US military power, because I remember that specifically, that many analysts told me that there's no problem. Even if it happens, the US will open the strait within 2 weeks. But we see that that's not possible. I think, again, referring to Donald Trump's remarks, that he said, even if we demolish 99% of Iranian military might, that 1% will be still enough to close the strait. One missile or a few missiles left would be enough to close the Strait of Hormuz. And that's just the missiles. Iran can still close the strait with drones. And we know that drone factories can be very small and clandestine, and they are very difficult to detect. So with the minimal military power in drone and missile capabilities, the Islamic Republic can keep the strait closed.
Well, that's a very good point. And we follow, report, analyze, especially the state-controlled media, domestic media inside of Iran. And the party line, as far as I can tell, has been very bullish on the prospect of imposing a transit fee in the Strait of Hormuz. Suez Canal comes up very often. Even in some cases, inviting China to govern the strait has been discussed on national TV, state-controlled national TV. What do you think? What are the chances of something like that actually happening? Is there any economic logic behind it, I guess, is what I'm asking, or is it pure political fiction?
I think Iranians are also surprised. I think they didn't expect that. It's not just the region that was blindsided. The Iranians are very surprised with this new weapon that they found. Look, for many decades, Iran invested on deterrence that included its missile programs, its proxies, but they were useless when it came to a war with Iran. Hezbollah, that they had invested a lot of money and resources in building it. Hezbollah was the biggest non-state military in the world, but still Hezbollah couldn't come to defend them. Hezbollah is now trying to survive. So all the deterrents that Iran had invested in were quite useless when it came to the war, to two wars in less than a year. So, but suddenly the deterrents that they didn't count on that much, closure of Strait of Hormuz, became the most valuable card. And now you can see that they have long plans for it. First of all, they are in the new defense doctrine that you can easily see that they are tying the future security of Iran to the management of Hormuz. We had Niksad, the deputy speaker of the parliament, coming and saying that Strait of Hormuz is our nuclear weapon and it will never go back to the pre-war state. So you can see that they have long-term plan for that. And economically, it seems that they're very excited about that. They say, oh, why can't we charge some transit fee or security fee for ships that pass through this strait? But that is, I think, exactly the problem, that it shows that Iranian officials are very short-sighted in this strategy, because I don't think the world will wait for them to take this route as hostage in a way, because I'm sure that the supply chain will find other routes rather than giving money to the Islamic Republic.
Yeah, how do you mean? Can you elaborate on that?
So, look, the alternative routes that we discussed, that there's so many pipelines in the region that they can carry oil from the Persian Gulf to other ports, so they can be transported to other countries around the world. Since the start of the war in February 28th, the volume transferred via these alternative routes have almost doubled, from 4.2 million barrels per day to 7 million. And we see a lot of investments in routes, alternative pipelines already happening. Last week, Iraq allocated $1.5 million for a pipeline that connects Basra to Haditha, and then it connects Jordan, Syria, Iraq, and Turkey. So, and we know IEA, International Energy Agency, they are strongly endorsing such projects. They support regional countries to invest in alternative routes. So first of all, we will see that other regional countries will invest in alternative routes, so in order to be somehow independent from the Strait of Hormuz. But also other countries. It's all about diversification. Many countries that had relied on energy resources in the Persian Gulf, they now see themselves quite susceptible, and they are looking at alternative sources of energy. For example, I can say, let's give an example, Pakistan. Pakistan had 50-year oil contract with Kuwait. They were buying their diesel, crude oil, and cooking gas from Kuwait. But now they can't import any barrels from Kuwait. So Pakistani oil minister said last week that they've been looking into buying oil from Nigeria. Actually, they're buying oil from Nigeria and the US, and they were looking into buying oil from Libya. The same diversification will happen to other countries and other buyers. The same trend happened in Europe after the Ukraine war, when many European countries, especially Germany, when they saw they were heavily reliant on Russian gas, they tried to diversify their energy resources, and they started importing gas, especially LNG, from other countries, especially the United States. You see that many countries around the world are now sending their tankers to the United States to buy oil from the United States. The US has become, for the first time, net exporter of oil. So you see that this diversification is happening. China has been investing for many, many years in other sources of energy to diversify and not to be reliant on the Strait of Hormuz. And I think this trend will only accelerate that trend.
Oh, this is interesting. And you mentioned also other forms of energy. Do I understand this correctly, that you're talking about potentially renewable other sources? And so basically, correct me if I'm wrong, but the face of the energy in the future, in coming years or decades, may change as the result of this.
100%. China has invested trillions of dollars on alternative sources of energy, especially nuclear and solar. That type of investment will certainly increase. Fateh Birol, the head of IEI, he is one of the most respected economists in the world. He said last week that Strait of Hormuz is like a broken vase. It's broken, the damage is done, it's almost impossible to put it back together. The world will look into an alternative solution. They need to look into alternative routes, alternative sources of energy, and also alternative energy, which is nuclear and solar. Many oil projects, for example, North Sea oil project that the UK government was looking into, they are now becoming economically unfeasible, because the closure of the Strait of Hormuz was one of the biggest oil shock in recent decades. Oh. And it will have permanent consequences for the energy market. So that's the part that I would say that the Islamic Republic, it thought that it has found a weapon, and it thought that it can activate it and buy some security for its future and also maybe some sources of revenue. But as we see, this oil shock will create exactly the opposite effect, in a sense that the world will look into alternative sources and alternative providers of energy, and they will become less reliant on the Middle East oil. And I think that will be a big damage to the region's economy and to the Islamic Republic's economy.
This is very interesting, because I remember in one of your recent op-eds, you mentioned that one of the hallmarks of the Islamic Republic is overplaying, overusing, maybe to the point of abusing their cards. And Strait of Hormuz, as you mentioned, they probably would, if they could, weaponize it and use it time and again if anything comes up or if any threats emerges against the Ayatollah. So am I understanding this correctly, that by this fundamental change, they cannot effectively weaponize the Strait of Hormuz and reclose it over and over in the future?
Yeah, I think there are some concepts that the Islamic Republic always confuses. One is having a leverage, and one is threatening other countries. It's like if you go and try to convince your manager for a salary increase, you might find a leverage, or you might take your manager hostage and you say, I won't leave this room I won't let this guy to leave unless they increase my salary. So the Islamic Republic usually changes the leverage into threats. And when it becomes a threat, the world can't ignore it.
Mm-hmm.
Iran has used, for example, its proxies. The proxies were supposed to be leverages for Iran to use them on negotiations table. But then they turned into existential threats in many countries and into a level that regional countries and the world couldn't ignore them. So Iran has done that mistake repeatedly. I think in a sense, they're overusing their cards, and for that reason, the world won't tolerate that, and they perceive them as a threat that they can't ignore.
Let's go back to, well, we discussed the future, probably in long-term future, and I completely agree with that. How about short-term? What are the most likely scenarios ahead, especially for the Persian Gulf countries that depend on energy exports and byproducts of that? What do you think will happen in that, especially in the near future for those countries?
I think in the short term, the regional countries will definitely lose a lot because the blockade from Iranian side and the US side won't be lifted unless there is a long-term agreement, which is very, very difficult to reach at this stage. So look, many regional countries tied their prosperity and the future to stability. Mm-hmm. This is the new logic of the Middle East. But the Islamic Republic single-handedly is fighting against that logic and is pulling all these countries down. So that is, I think if you look at the bigger picture, that has happened many times in the region. So whenever there is a movement in the region that is trying to go towards a better future, you can see the Islamic Republic single-handedly is holding the region down. For example, in 60s and 70s, we saw that many countries were rising up against monarchy form of government, and they were trying to experience different form of republican state. It could be military or it could be other forms, but suddenly the Islamic Republic showed up as an Islamic Republic and it introduced a new form of government. And after that, it affected the region. So after that, when you see new forms of governments being experienced in the region, it's not the republics anymore. You suddenly see the rise of the Islamic State, the Taliban, of Al-Qaeda. These, you see many leaders showing up in many countries trying to form new Islamic forms of government. We saw that, for example, the region tried to move towards reconstruction of the September 11th and the intervention of US and other countries in the region. The Islamic Republic, again, single-handedly blocked such effort in Iraq and Afghanistan and tried to somehow hijack the whole process. Again, we see that during the Arab uprising, that the region tried to move towards a more democratic forms of government. We saw that how the Islamic Republic tried to block that move in Syria and not allow this youth movement to move the region towards that sort of experience. Many people, including myself, believe that the Arab uprising started from Iran during the Green Movement, but the Islamic Republic blocked that movement in the country and outside. So this is another phase that the region in the last decade or two, they tried to test a new form of prosperity, which was reliant on tolerance and security and safety. And they tried to bring a lot of foreign investment to the region. It was happening in Dubai, in the UAE, in Qatar, in Saudi Arabia. And the main necessity for that is stability and safety. But now Islamic Republic, by attacking infrastructures in all those countries, that dream suddenly vanished. I don't think many of those countries can go now and justify investment of huge data centers from Amazon, AWS in the region. Those data centers are very, very susceptible from now on. So in that sense, I think, unfortunately, I would say both short-term and long-term, regional countries will pay a heavy price for that.
Well, that's a very good point. So basically, the world economy may adjust, but the region will probably cannot move any further or cannot prosper, at least as long as the Islamic Republic is there to block any efforts or any evolution of not only Iran, but also the neighbors in the region.
Yeah, that's how I see it. I don't see any way out of it, because the logic of the Islamic Republic, the logic the Islamic Republic will impose on the region is a very aggressive logic, and it's very unpredictable. Even let's go back to what we were saying about charging ships that go through the Strait of Hormuz and make some money. Do you think the Islamic Republic can handle that? Like to say that, okay, any ship can pass, they can give us 1 or 2 million. They can't, because they will try to single out some ships that, based on the flags that they are carrying, based on their destination. Oh, this one is going towards Israel. Oh, the owner of this ship might be Israeli or American. Or based on, I don't know, the producer or the seller, they will try to impose their political views and their preferences on this transit route. And that will make the waterway very unpredictable. So many shipping lines, they won't risk it. If it will be the same thing as many dual nationals or tourists that go to Iran. Mm-hmm. It's so unpredictable. You might get arrested without any idea, and it's not predictable. So the Islamic Republic has shown that both politically and economically, it has its own logic, which defies predictability, which defies stability. So for that reason, I don't think they can. The Araqchi was in China. They're talking about post-war order to run the region, but I don't think that order is possible if the Islamic Republic is one of the players in that order.
And another point I think it's not emphasized enough is that when energized, when they get a chance, the ambition is boundless. Probably case in point, Strait of Hormuz was a no-go, and of course it was blocked and it was unsafe to move through. At the same time, UAE started using Fujairah, so they rerouted, and Fujairah technically, as I understand it, is beyond the Strait of Hormuz, at least technically. But they readjusted, they grew the threat. They included Fujairah, they attacked Fujairah immediately, didn't they? And I think to your point, if energized, I think the threat is not going to, they're not moving towards stability, another feature probably of the Islamic Republic. If given the chance, if energized, they probably will increase their ambitions.
Yeah, I think, and this is not something new. The Islamic Republic has attacked alternative routes to Hormuz for the last decade. It has tried to sabotage tankers in Fujairah with some limpet mine, like I think 17 years ago. It has attacked by drones to the west-east pipeline in Saudi Arabia, and it had activated the Houthis in Yemen to target oil ships in the Red Sea. So all these show that the Islamic Republic, in a long-term plan, was trying to increase the disruption of transit, free transit in the Middle East. And they would say that, don't think that this is just a 21-mile strait. We have control over the whole region, and no one can bypass that. At the same time, they built a pipeline to Jask in southeast Iran to bypass the strait themselves. So knowing that no other country has the capability or will to attack that. So that's been for a long time the strategy of the Islamic Republic, to disrupt or be able to disrupt and send a signal to the regional countries that we are able to disrupt anywhere in the region, while working on the alternative routes for itself to stay away from the chaos, which was also short-sighted, because any crisis that happens in the region will have an impact, long-term impact on Iran's economy as well.
Excellent. Thank you so much for joining us, Bozorgmeh Sharafuddin.
Thanks for having me.
Now joining us is Iman Nasiri, Managing Director for Middle East Research for the oil consultancy FGE Nexent Group. Dr. Nasiri, thank you for joining us.
Thank you for the invite.
I've been following your interviews and writings. A few days ago, you described two binary scenarios ahead for the region: a Strait of Hormuz remaining closed for the next couple of weeks, by the end of May at the most, or the second scenario, a prolonged closure of Hormuz, which will result in, and I quote, severe disruption well into 2027. Both scenarios you characterize as rather extreme, and I completely agree with you. Has anything changed in the past few days, in your view?
No, not really. And we had another weekly discussion among the senior team of analysts at FG Nexent today. We still remain on that same two scenarios that as we speak. And what has changed basically since that kind of interview and today is the recent development of the so-called MOU, the one-pager agreement between the Trump administration and the Iranians to agree on a more prolonged peace and ceasefire, and potentially a pathway into a larger, more detailed agreement. But in my opinion, that hasn't changed basically the calculations, the equations, the parameters. Really, this to me is more of the same headlines that has a short-term impact on sentiment in the market. As we saw, it brought the prices down by up to $14 or 14%, and now it's back slightly from the lows of $96, $98, just about 200. And that's basically a market longing for a resolution. The energy market and the traders and the suppliers are really pressed and frustrated by the situation, by lack of supply. Market is severely disrupted. A significant amount of demand is unsupplied, undersupplied, and inventories are drawing significantly to offset some of that pressure. The market is looking for a happy headline to basically go with it and put a cap on price escalation, which we will end up seeing more of that if every positive headline helps, but when it doesn't result into a resolution, it gives more frustration to the market and escalate price higher to a new level. So nothing has changed in that the two parties are still, in my opinion, very far from each other's expectations, and it won't happen. The big news, the agreement to lift sanctions, to open the Strait of Hormuz fully to Iranian flows and non-Iranian flows, and also agree on all the nuclear terms and whatnot. What has happened is that ceasefires are usually defined short-lived, and after a few weeks, everyone's like, okay, so what's next? Now, a next step is, okay, let's agree to start. First of all, it came after Trump and Marco Rubio announced the end of epic fury, the end of war. So first they said, okay, we're done with that. We're now big time into economic fury. But it obviously comes at a cost to the world's economy, GCC economies, Asian economies, and everyone. So maybe without the military pressure, now that Epic Fury is over, maybe we will give another chance to Iran to come to terms with our demands. And for the same reason, in my opinion, that the same regime that has not agreed to the American administration terms over the last couple of years and over the last 2 months after the war, it won't happen. So where we end up is that, okay, change of course from ceasefire into this potential MOU, which I doubt to be signed, but even if it's signed only to enable a path for further negotiations. And then we are stuck in the same situation. So if the two parties, again, back to those two binaries, if the two parties within the next few days, by the end of May, agree that yes, there is a possibility to bring us close to each other into an agreement, then suddenly we are in that binary option 1, which is we can see the flows resume from early June. In our scenario 1 is mid-June, when the flows start, the ships start to go through, and basically by July or August, we could go back to 90-95% of the pre-war flows. But if it didn't, what happens is that either Trump will continue the blockade and Iran will continue to keep restrictions, and we're in the prolonged situation. Why do we think our base case is a mix of these? For two reasons. First, the world cannot, on paper, cannot leave with 6, 12, 18 months of 25% of its energy needs out of the market. So there need to be a creative way, a resolution to bring some of that back. We saw that during the war, Iran agreed to supply, for example, to give a convoy of vessels, Iraqi vessels to go through, agreed to give permit to Pakistan to bring in some of their cargoes to India. So that kind of arrangement will see a gradual recovery in flows from 5% or less now, or another mechanism, another interim deal to lift the blockade, and then Iran says, okay, if you don't lift the sanctions, I will only let my allies, my friends to go through. So that is where we are now. Between these two scenarios, still we see a gradual recovery from mid-June to about 50-60% of pre-war levels by August, and then almost flat-ish with a slight upward slope well into 2027. And no, nothing has really changed.
In that case, if the second scenario, if a prolonged closure of Hormuz continues, what are we talking about? I mean, $1 billion question probably becomes the price of oil. How high can it get? Let me preface that with that closure of Strait of Hormuz not long ago may have seemed unthinkable. And it was expected to be reopened much earlier, I would say. Nonetheless, I think many estimated the price of oil to go much higher, 150, 100, maybe 200. A lot of state-controlled domestic media inside Iran were expecting $200 a barrel oil. But that didn't really happen. Why not? Why didn't it happen? And if the prolonged scenario happens, how high the price of oil can get?
Yes. First of all, it did happen. The price of jet fuel was over $200 for a prolonged period. The price of diesel has been over $200 per barrel. The price of Middle Eastern crudes were over $150, $160, $280 for a prolonged period. So Brent, which is what everyone refers to when you type oil price in Google, it gives you Brent futures. And Brent was not necessarily the highest distressed and stressed cargo. It was the supply constraint Middle Eastern crude. So if you search to buy crude, then you would see that, oh, it's 165, no, 120. The second is that futures market was always optimistic that, oh, something will happen in the next 2 weeks to a month. And futures Brent price, which is what everyone looks at, is always at a discount to dated Brent, which is what the price is today. And if you want a physical cargo today, has always been at premium. Now it has come closer. At certain point in time, it was $30 to $50 difference between what you see on the screen as price of oil than what was traded as physical barrels. So number one point is that it did get to $150 to $250 oil, what was traded in terms of products, which is what consumed, and also certain crude oils which were supply constrained. The second is that the market started to believe certain positive headlines. As I said, the ceasefire brought a lot of hope to the market that it's the end of conflict, and soon the strait will open. The Freedom Project, now the MOU. So there, in certain ways, in fact, the general license that Trump gave for a month, a waiver to Iranian sanctions, basically for all, he said, I give this gift to the Chinese. So those were reliefs that put a cap. The market is furious and frustrated. The players, the traders, the buyers, everyone, we cannot. And today, we have 14 million barrels, 12 to 14 million, depending on how you count, barrels per day of unsupplied demand. So demand destruction has happened. A lot of ships are not sailing for two reasons. First, they are not coming into the Gulf to pick up cargoes, or they're parking outside with with cargoes, containers to bring in. A lot of flights did not fly. A lot of activities, economic activities were shut down, and a lot of household demand were not supplied. For over 2 months in India, many people do not have gas to burn for cooking. So remember, the market is furious, but is looking for a positive angle to think that it won't last forever. We're going to get out of this. And that those signals, either intentionally by Trump administration and himself on Truth Social, or other means such as the general license on Iranian, waiver on Russian crude, all of these had a dampening effect on the overall market, which is reflected in the Brent futures crude oil price, as I told you on the window. But in reality, the commodities which are really constrained are still traded in physical market at $200 or more. And also the crude, the Middle Eastern crude supply is also priced at much higher than what you see on the screen as the price of Brent oil. So yes, it will. And remember, if this last hope that has emerged over the past 2 days, which basically pulled the price down by $14 suddenly overnight, if it fades away, again, another tweet that says, you know what, I'm not happy with the response I get from Iranians, so we go back into full blockade and which means Iran will continue to take hostage all of the other barrels within the Gulf. You are going to see the prices back into $115 or more, and our forecast in that scenario for May average price, we are 7th of May, another 3 weeks, is over $130 for Brent price currently, in the absence of a resolution from what is now going on in terms of another hope for a resolution. So prices we forecast for Brent, which means all of those other commodities that I mentioned will remain well above this level, is $120 to $140 for the next 2-3 months, May, June, July, before it starts to come to $100 to $120 range for the rest of the year, only assuming that the flows start to come out at a slow recovery rate to up to 60% by the end of the year.
Oh, that was very informative. Thank you for that. Now let's focus on the other side and the blockade. I think this is a very interesting issue because we hear all sorts of conflicting information about it. President Trump mentioned this last week, and I quote, Iran's oil infrastructure is days away from exploding because crude is bottled up due to the blockade. At the same time, on the domestic media inside of Iran, they are talking about resilience. They say we can endure this. We can reduce the extraction and continue keeping the oil wells open for an extended period of time. They are using old tankers and other makeshift, I think, tactics to basically survive the blockade. What is your take on that? Let me put it this way. Is there a countdown, a point of no return, if you will, for Iranian oil fields which are mature to begin with?
No, there is a miscalculation, basically information in all of that from two points of view. One, there is never such point of no return, not only for Iran, but also for the rest of the region. Remember, Iraq has shut down significant amount of its production from about over 4 million barrels per day, nearly they are down to 1 million barrels per day or less, since early March. Almost 3-4 days into war, they had to start shutting in significant amount of capacity. So no one assumes, and we don't, that this means those capacity are gone and they are not going to come back. Similar thing with Iran. And remember, Iranians have been producing on their capacity for a good 8 years since first round of President Trump and sanctions coming back. Iran has been producing on the capacity, means that they have not only experience, but also basically a system in place to deal with that. Two ways. First, you go rotational production, you shut in one well for a week. There are technical ways, systematic ways, but at the end of the day, Iran will at some point, and that point is not days, is weeks away from us in terms of storage capacity onshore, that they have well over 30 days from today to fill without shutting in capacity and not exporting. So let's assume they are not exporting anything. They have to produce at the current rates, but then they will have to fill storage tanks instead of tankers. That's about a month. There are some tankers within the Persian Gulf that could still be filled, those which were operational and not sail away, just fill and stand there. Certain tanker trackers estimate that to be 20 to 30 million barrels of capacity. So that's another 10 days or so. And then there are creative ways of bringing the old tankers into operation as a storage. Some people said change the basically product tanks into crude, all of that. But it doesn't matter. Let's assume that Scott Bessent, the Treasury Secretary of Treasury, or President Trump are correct. Let's assume that Iranian media or our estimate is incorrect and Iran doesn't have much more capacity to fill, and they have to shut in. Well, how much they have to shut in? They have to shut in their excess supply, meaning that whatever they consume at home, which is somewhere between 1.5 to 2 million barrels per day, they can keep that. The remaining additional supply that used to be exported, they have to shut in. That is well below the amount that Saudi Arabia has shut in for weeks now, if not months. That's well below the amount that that Iraq has shut in, both in absolute term and percentage term. So yes, that's unfortunate, but that's common between all the producers or several of the producers within the Gulf who cannot export. And that does not mean explosion of pipes or wells or anything. That just means you shut in, you may lose some of your capacity, 10%, 15%, but then it all depends when and how it comes back, because no one assumes a sudden overnight return of all flows and production capacity. So everyone has time from days to weeks to months to bring their production back, and that includes Iran. So there is that misinformation or misunderstanding in that, which is, first of all, there is still time to the point of shut in a big and meaningful way. And second is that, yes, Iran at that point, be it tomorrow or a month from now, will join the club of other producers in the Gulf who has had to shut in because they have not been able to load. Remember, Iran has been loading vessels up until mid-April, while others, Kuwait, Iraq, Saudi from the Ras Tanura within the Persian Gulf, has stopped loading vessels almost early March. So at least 6 weeks after everyone else stopped loading, Iran was still loading. That gave them extra buffer to deal with this situation. But eventually it's a situation that everyone else is in that. So I cannot link that to a massive economic pressure. What is, in my view, however, more pressure on Iran in terms of economic is perhaps one, the inflow of some basic goods for the economy, for their agricultural input, and perhaps some of the other catalysts and other goods and services that used to be imported. That's important. The second is the cash flow, which is going to continue until Iran sells all of the oils that they have on the water and start and receive all of the payable amounts, which usually they receive in up to 90 days. Their term of payment is 90 days, much longer than other Gulf producers. So then the pressure is going to build, but that's also a month away from today. And meanwhile, both the Gulf producers and the consumers that are not receiving their energy input are also under immense economic pressure.
Well, of course, that's a good point. And to that point, speaking of other, especially GCC countries, other countries in around the Persian Gulf, recently UAE's departure from OPEC made waves. And I want to ask you, was it a long time coming, or was it really, did it really surprise, especially people who were intimately familiar with the situation?
No, it was long anticipated. UAE started to basically ask for or mentioned their intention to depart and leave the OPEC group as they started their program to increase their production capacity towards reaching a 5 million barrels per day capacity by 2027. Now, back then, 2027, in 2023 and 4, when they started to talk about it, was a long time to come. Now it's just around the corner, when their capacity is going to be a million and a half higher than what OPEC gave them as a quota ceiling of production, which they were at around that levels before war, and now a lot less than that. So it was always discussed and anticipated. The problem that they were facing, and a market never expected it to happen anytime soon, or it was hard to put it in your base case forecast, was that leaving OPEC as one of the major producers in terms of size would bring the group's total production capacity, total production, and more importantly, spare capacity, which is the real power of OPEC, is how much spare capacity they have to increase the production or cut production. That buffer was almost halved after UAE left a week ago, because it was mainly held by Saudi Arabia and UAE in a kind of half-half format. But Saudi Arabia had the same 1.5 million barrels per day buffer on a production capacity of over 11 million, and Saudi had that on a production capacity of 4 million. So the ratio of unrealized capacity was much higher, hence they wanted to leave. They chose this time. It wasn't a surprise. It came as a shock to certain people, but the moment the market started to think about why and why now, it made a lot of sense. Right now, the market is severely constrained and undersupplied. So basically, right now, a spare capacity of the world production is zero. Everyone is producing as much as they can to supply a significant amount of undersupplied market. So right now, it didn't create any impact on market fundamentals. It did create a little bit of sentiment, but remember, the size of problem is 14 million barrels per day. The UAE parameter is only 1.5 million. So it got lost in a big wave. The market is dealing with a huge, basically, tsunami, and a small wave was lost. But also, it's a tsunami that may take months. Hence, the market will solve this problem in a bigger solution that they need to find for that bigger problem. So it becomes part of a bigger problem, and then it gets resolved in the middle of that major equation to be solved. So they chose the right time to create no immediate impact, no short-term impact, and potentially not a medium to long-term impact. However, with the total size of OPEC now shrunk by 5 million barrels per day in total capacity, by 3 million barrels per day in total production, and spare capacity by over 1 million barrels per day, when Strait of Hormuz is fully open, when everyone has caught up with their production level because they have shut-in capacity, they have to bring it back. At that moment, OPEC will have to basically digest this extra production that would eventually come from UAE into their new equation that they have to solve to balance the market. So only then there is a little bit of more bigger problem for OPEC, only assuming that the only consideration and fear remains, what if other members start to think that, oh, if I leave OPEC, I can also produce more and benefit from higher revenue if OPEC stays in place defending the price at certain level. That so far hasn't really been materialized. All the key other members, especially the two that are with a question mark on top of their name, is Iraq and Kazakhstan. They have both come out and said, actually, we're okay. We're not thinking about leaving. So far, so good. But there remains two considerations. One is a bit further down the road, depending on when you or anyone wants to think that everything is back to normal pre-war. And second is if someone really wants to follow the UAE footsteps.
Thank you, Mr. Nasseri, for joining us. If you liked this episode, hit the like button, leave us a comment, let us know what you think. You can also sign up for our weekly newsletter at Iran International/newsletter. We also have a dedicated English website. Check it out at Iran International/EN.